It's about that time of day again here, boys and girls. Welcome back, welcome back. JJ here. SchoolOfTrade.com. SidewaysMarkets.com is our blog address. It's nightly newsletter time, Thursday evening, February 5th, 2015, the 5th day of the second month of this crazy year of 2015. Hope you guys had a great Thursday. This has been quite a week. All the way up, all the way down, and then halfway back up on crude. Who would have thunk? We knew we were going to get a little bit of a rebound on crude, but boy, we picked up right on that bullishness this morning. Had some great trades going long. Expecting it to make the full collapse back down, but it never did. Russell, boy, that Russell just shook off those sellers. You've got a definite paradigm shift, it appears, we're having right now on that mini Russell. We're going to talk about that in a moment. And gold. Gold continues to be one of our easiest. Well, we've been selling short on gold for the past week and a half. Today was another day of winning selling opportunities off those highs. So, Russell just didn't collapse. We knew we weren't going to get it that easy, but boy, it kept blowing through. We'll take a look at that in a second. Crude oil has a bit of a, what's the word on crude? It looks a little bit confused. It's got a bit of an identity crisis right now, and it makes perfect sense if you know what tomorrow, Friday's NonFarm Payroll holds. And again, the gold here, still bearish. Boy, I could talk about this all afternoon here, but we have a newsletter to get started here for you guys. Before I jump into charts here for this evening, I got a lot to cover. Before we jump into charts, I want to remind you guys to watch this video on our trading blog here at Sideways Markets. There are 3 reasons why you should watch this video on our blog. The first reason is you can download all of the charts that I'm talking about this evening. You can download every single one of them on your computer and use them tomorrow. Follow that link right below the video. The second thing here on our blog, upper left-hand corner, you can see a spot to grab your free pass. What is the free pass? Well, you might be curious what it feels like to be inside of our trading room, right, with all of our members at School of Trade. We get together every day in our trade room and trade live in real time. We call exact trades. We trade according to these levels we talk about each day on our newsletter. If you'd like to see what we're all about, and you're not yet a member of School of Trade, I've got a great free pass for you guys. If you're not a member of School of Trade, on your trial, it's also included. And of course, last but not least, the third thing here, we have a nightly newsletter mailing list. And I would love to send you an email every evening when our nightly newsletter is published. Promise you I won't waste your time and I won't fill your inbox full of junk. Only the nightly newsletter goes out there every evening on that list. If you never want to miss another newsletter ever again, make sure you join that nightly newsletter mailing list. So 3 things here. Download today's charts, grab your free pass, and we'll see you in the trade room tomorrow as a guest. And last but not least, register for our nightly newsletter mailing list. If you grab the free pass or if you register for the mailing list, please be aware I'm going to send you a verification email to make sure that I've got the right email address and to make sure that you give me proof or approval to keep sending you emails. All right, guys? So make sure you check out the blog for those 3 important things. Now, I got my seatbelt on. I got my seatbelt on. Helmet's fastened. 10 and 2. Yeah, I'm well hydrated. We got a busy newsletter here for you guys this evening. You ready to jump in? Now, before I get into this, I want to make everyone aware that we have an extra difficult job this evening. Well, I have the extra difficult job. You just sit back and listen and watch. But tomorrow, we have NonFarm Payrolls. This is going to happen at 8:30 a.m. Eastern Time. Now, these NonFarm Payrolls, they do not sneak up on us. They are the first Friday of every 1 month. Okay? So NonFarm Payrolls tomorrow morning, unless the first day of the month is a Friday, which sometimes it is, but almost always that first Friday of every 1 month, tomorrow is the first Friday of February, and so of course we know that's NonFarm Payrolls. So my job tonight is going to be to prepare for everything. That's my job. My job this evening is to be prepared for all hell to break loose tomorrow. I have no way of predicting what's going to happen tomorrow. Okay, and anybody who says they can is lying to you. Now, NonFarm Payrolls is very simple. You get one of two reactions. tomorrow morning at 8:30, that news is going to either cause such volatility that you really can't even trade it. Or the polar opposite of this is it will, if it doesn't go insanely volatile after this news tomorrow, it will just kind of sit there and do nothing. So tomorrow morning, when you're getting ready to trade your non-farm payrolls, well, I shouldn't even say that. We do not trade the non-farm payroll report, okay? As I always say, right, if you like money, do what I recommend on this. If you like having money in your trade account, don't go anywhere near within 15, 20 minutes on both sides of that news. So 8 o'clock till about 9 o'clock tomorrow, you really got to be careful, all right? So be careful. Tomorrow is not the day to move to your live account while you've been practicing in simulation. Tomorrow is not the day to be testing out a new piece of software or testing out a new strategy. Tomorrow is not the day to be running automated systems. Tomorrow is not the day to be doing anything besides being very conservative. We've had a fantastic week this week, so we're going into tomorrow knowing that we really don't need to prove anything tomorrow. A lot of traders will take the full day off tomorrow. In fact, the Monday after non-farm payrolls is oftentimes the best day to trade non-farm payrolls because a lot of the smart money, again, they know that tomorrow is almost impossible to predict. They know the reaction is going to be volatile most often. Okay, no guarantee, but usually that volatility is going to be a little bit too much to handle for the first hour after that news comes out. So a lot of professionals will just sit on hands. They'll grab the golf clubs. They'll take the boat out, right? They'll go see grandma. She misses you, by the way, right? And they'll come back on Monday. So don't forget, tomorrow, non-farm payroll Friday, be very careful, be patient. I'm going to be with all of our members in the School of Trade trade room. So don't forget, come out and see me, and I'll walk you through how we're going to trade non-farm payrolls. So I just want to I kind of want to set that in motion here before we jump in. I want you to know that what I'm going to do right now is I'm going to get ready for all three scenarios: up, down, and sideways. That way, you're going to have a great plan no matter what happens tomorrow. Now, we're going to start with our slowest anchor chart, our 64 anchor. And this is going to give me that big bird's eye view. And we can see it. There's a couple key components here. We had this big spike up on gold. This was a few weeks ago, right? This is a real long-term chart. And then we saw them try and fail. And if you remember, we've been selling this sucker down for the last week and a half, making a killing, I might add, right? It's been a very, very good move off that high, and it's been really easy. Sell the high. We got 2 chances to sell there. Another chance I gave you guys last night. We've had a very easy week here on the gold, but that's going to come to an end here now because gold is the most, well, I shouldn't say the most. The dollar is the most active response to non-farm payrolls, but, you know, gold is just the tail that's wagged by the dog that is the dollar, right? Another one will be the euro. The euro can't help itself. It has to react to that dollar index because the dollar index is made up of over 65% euro. So we got dollar, euro, and gold. These are going to be the ones that are going to be really, really slopped up and really choppy ahead of the news and will have dramatic reactions after the news. Again, that was gold, dollar, and euro. We don't trade dollar, but definitely trade gold and euro. Be careful tomorrow with those. So now we have this price coming down, and we have a short-term trading range. It's very important that we understand this short-term trading range. Look what happens if we break below it. If we break below this 54.4, now look where that puts us. Back inside this range. Okay, that's bad news for the buyers. Very good news for you sellers. So I would expect, if we see tomorrow below 54.4, I would expect a breakout retrace and most likely a run to this trend line. Right? That would be my gut. That would be my gut, right? We're going to get a runoff down to that trend line. Difficult to tell how far we go tomorrow, right? Remember, this is a really big chart here. This is like a weekly chart. So what you want to think about is break below, don't sell it, wait to sell the retracement, and then on the way down, keep an eye on these areas right here. Okay, those are going to be the sweet spots for us tomorrow to the sellers. If we go higher here, then we know we're going to run right back into the high of that range, and where we go from there is anyone's guess. All right, it's anyone's guess. We'll be selling those highs most likely. So what I want to communicate with you right now on gold is that we are just teetering on top of this big range. And you know that if we get back inside that range, all those short sellers are going to come in. They're going to try aggressively to sell this sucker. Okay? Be aware of this. Now, moving forward, we take that 64, we cut it in half, we zoom in now, and now you can see here's that channel that we had drawn in off that 64, right? This is now zoomed way in here now, and this is the range that we saw on the 64, and then I went in and highlighted a slightly smaller range so you can see just how narrow and how consolidated this market has become. Okay, so gold is bearish, but it's also trading sideways. This is no surprise ahead of tomorrow's NonFarm Payroll Friday. Okay, we see price is clearly bearish, but it's stuck in this range. Our plan is to sell the highs of the range. If we break out, we're going to use our 5 different breakout patterns. You're going to learn all about my 5 different ways we can trade a breakout when you log into my trial or you join as an intermediate member here at School of Trade. So right now, we can easily see we're bearish. I've got easy sell zones overhead. So if we break out to the upside, I'm looking at breakout fade, right? Breakout fade. If we break to the downside, breakout retracement. Okay, we've got a measured move target waiting for you down bottom here. Measured move target. And then you can't really see this very well in this chart. Let me go over a little bit. There you go. Here we have a previous trading range. This prior trading range is going to be a price magnet. So we're going to try to go down. Again, if we break out of the downside, we get a target here at the top of the range and another target at the low of the range. Okay, so be aware of that trading range. And don't be surprised if we do collapse, we get stuck back inside this range until Monday. And that's when, remember, that's when the professionals come back in, right? And they will start trading Monday's reaction to non-farm payrolls. Remember, Monday is oftentimes the best day to trade this stuff. That's why I'm really going detailed in this right now, so you've got this for Monday as well. Okay, so we're definitely bearish here at this time. We'll see again. Anything can happen tomorrow. We cut that number in half, go to the 16 on gold, and this is a great chart. There's a lot going on this chart, as you can see. There's a lot going on here. But there's a lot of very important clues on this chart, especially if we're a seller right now. If we're a seller, well, obviously we know that gold is bearish, but it's inside a trading range. That bearish gold, we're going to keep selling at resistance. We're going to keep selling at resistance. And depending on how high we go, we have these measured moves. A, B, C, D. Measured move, a little bit larger measured move. We have A, B, C, D, a little bit smaller measured move. And again, remember what I'm doing right now is I'm just getting prepared. I'm getting ready for whatever might happen tomorrow. That's why there's a lot in this chart, right? You'll notice I don't usually put this much on it. Now, another thing, targets to the downside. Take that range, copy and paste it, range expansion for sellers. Take that range, copy and paste it, range expansion for buyers. Okay, so if all hell breaks loose tomorrow on gold, you've got your levels of resistance overhead to sell, and you've got your levels of support below to use as profit targets. Let's keep going. Last but not least here on the gold is my price action chart. This price action chart is one hell of a chart. It's got a lot of great clues on this chart. The first thing I see is this channel, right? We can easily see we've got pretty much just a lower high there. I don't think we had a low back here. No, we didn't. So this channel is still relatively untested to the downside. Okay, we're kind of speculating a little bit that it's going to be a channel. All we really know is that it's a trend line, right, overhead, because that's been tested twice. I see a bearish channel long term. I see a bearish channel short term. Okay, so once again, no doubt about it, we are bearish. The big question is where do we go tomorrow after non-farm payrolls? Easy stuff here. I want to sell the highs, sell the highs, sell the highs. If we go higher, our job is easy. Sell at resistance. If we go lower, we look for a breakout retracement, which, by the way, I teach that breakout retracement pattern in our free trial. And again, you'll notice I take my trading range, I copy and paste it down. There's my range expansion support. I copy and paste it up. There's my range expansion resistance. And it just so happens that we have a measured move as well as the range expansion support there. So I'll tell you, what a tasty little area there right around 1240. 1240 is definitely going to be a price magnet if these sellers get their way tomorrow here on gold. Okay, looking good here on the gold. Again, a lot to cover here on this gold. Want to make sure you guys are prepared for this tomorrow. And then again, don't forget, if it's too volatile tomorrow, just come back on Monday. Monday's oftentimes the best day to trade non-farm payroll Friday. Now, let's go to the Russell. We move from the funny yellow metal that is gold futures to the mighty mini Russell. Now remember, we had the Russell pegged to collapse off that high. But boy, did they sure as heck weren't drinking that Kool-Aid. They had no problem running it back up. And remember, like I said last night, remember how I talked about this last night? We can't just blindly sell that. We don't call it bearish until we make a low, a retrace, and then a move lower. Remember that last night? Last night, my exact words were, we're looking bearish, but we haven't seen confirmation yet. It was a great example looking at last night's newsletter and seeing what happened today. We were hoping that we'd get the big drop, but like I said last night, we didn't have the confirmation. The next chart is going to really kind of re-emphasize that. So what I want to show you here right now is look where we are. Now I'll tell you right now, it feels like, the way that price action feels, it feels like the Russell has kind of turned a page of some sorts. The way that it feels extremely bullish. Now it's difficult because again, we're going to non-farm payroll Friday. We get a heads up earlier this week on Wednesday morning from the ADP employment report that Friday's non-farm payrolls are probably going to be pretty rosy. They're probably pretty good. And that, of course, would explain why equity indexes will be pushing higher, gold pushing lower. So it kind of makes sense. But here's what I keep banging my head against the wall about. We can't really do very much at these highs besides sell, right? I mean, okay, if I'm a bull, okay, if I'm a complete bull right now, wonderful, but I can't buy the highs. I mean, you can do whatever you want. This is we don't have any boss man or woman, right, as traders, so you can do whatever the heck you want. But you know my saying, if you like the money in your trade account, don't buy the highs or sell the lows. So I'm a bull right now in the Russell. I still have to wait for a pullback to buy. If I'm a bear on the Russell right now, which in my opinion is really the only thing you can be at these highs, what am I looking for? Well, what I'm looking for is when you're in a situation like this, there are two ways to get short. The first way to get short is to simply look for a reversal pattern. Draw your trend line, look for a new lower low, right, and you're gone. Okay? One way to get short is to find a bearish sell pattern at these highs. But I think the easiest way to make the fastest money you're going to make selling the high is not to actually look for a sell trigger. Look for the buyers to try, and when they fail, you're going to see right away. You'll see money a lot faster when the wrong side of the market gets caught off guard, so to speak. Okay, so two ways to get short. Take a sell pattern or a failed buy pattern. Remember that. Okay, that little trick took me about a half decade to figure that one out. So Russell is up near the highs right now, and I have a hard time being a buyer here. Okay, so I'm going to be looking for buyers to fail. Again, it's very difficult to be 110% confident about what's to expect tomorrow because this news coming out. Now, here's a chart that really says a lot. This is my 32 anchor on the Russell. The Russell is very bullish. Okay, like I said, the way that it moved today, And the last few days, it's felt very, very bullish. It kind of feels like what's been keeping this. Remember, the Russell's the only one of the E-minis that's not resting right up at all-time highs again. Okay, the Russell, unlike the Nasdaq, the Dow, the S&P, right? They've all been flirting with all-time highs. The Russell hasn't gone back to all-time highs in quite some time here. So we're definitely anxious here to see what happens. The Russell's been kind of the laggard of the E-mini group. You'll notice once again, though, here, we're very, very bullish. In fact, if you look at the volume at the bottom, the volume confirms it significantly, right? So volume had no problem staying strong as we went higher. So that volume is usually pretty darn accurate. The problem we have, again, is we don't know what to expect tomorrow from non-farm payrolls, and we're at the highs. This is the stuff that keeps professional traders up at night. You know it's bullish, but we're at the highs. It's kind of like what we heard last year in 2014 as I'm talking to fund managers, I'm talking to analysts, and the whole year last year, they're talking about equities going, I don't know what to do. We're at the all-time highs. I guess we keep buying, right? That doesn't sound very confident. And that's how I feel right now. So being very honest with you guys, we clearly see this volume confirming, but if you want to keep buying, you got to wait for a pullback, right? You can't buy at this range high. We have no choice. We got to wait for a pullback. So what I'm going to try to do is on the Russell, again, we talked about there are two ways to get short. I could wait for a break and go, or what I expect to have happen is price pulls back, tries to go higher, maybe we get a double top, maybe we get a slightly higher high there, but wait for those buyers try and fail. It's going to be obvious, right? It'll be obvious. The buyers will pull back, right? They'll take the bait here at 94.1, pull back, they'll try again, maybe double top, maybe a little bit of a lower high here. A lower high would be ideal, right? And we see those buyers start to fail. Okay, much easier money that way than having to wait for the break, 3-point reversal, right, and take it back down. So bottom line, we know we're bullish on this Russell. If you're a bull, you've got to stay patient right now for the best buying opportunities at those green zones below. If you're a bear, which I think is really the only thing to be at these highs. If you're a bear right now, you want to look for these buyers to try and keep it going higher here and fail. Now, we teach the failure stuff all day long in our trade room. So don't forget, you're not alone out there if you're trying to make sense of this stuff tomorrow. So come out and join us. Now, look at this chart here on the Russell. Okay, last of these anchor charts here. Look at this chart. Here's a really interesting chart. And this is just, you look at this chart here, pretty much all of these charts, and you go, boy, this looks like, it's difficult because there's a lot of conflicting signals. This makes sense if you know what tomorrow is. If you didn't know tomorrow was non-farm payroll Friday, you're looking at this going, oh my goodness, this is difficult. But it makes sense because it doesn't make sense. Again, crazy stuff happens in non-farm payroll Friday. First of all, look at the volume. Right? This is a multi-day comparison. It's huge. We don't see this very often. Okay, so you got really dramatic volume confirmation. So from one day to the next, boy, oh boy, they unloaded at these highs. And you can see, again, Russell clearly bullish. Volume confirms the move higher, but the channel overshoot. And we saw the power of the overshoot. I mean, my goodness, haven't we seen the power of the overshoot the past few weeks? We saw an overshoot to the downside yesterday on crude. That sparked the move higher today. Huge overcorrection today on crude. We'll show you that in a second. So this should not be anything, surprising to us. We see the overshoot of this bull channel, and so naturally we expect there to be a larger correction. So I would expect price to possibly make it all the way back down here to that 94.1. Again, if you're a buyer right now, you've got to really sit on hands and be patient, right? Don't sit on them too long, though. I don't think it's good for the hands sitting on them that long. But you know what I'm talking about, right? Now, if you're a seller right now, you should have the green light here to get short. But again, just be careful ahead of tomorrow's non-farm payroll. After 8 o'clock in the morning tomorrow morning, between 8 o'clock and 9 o'clock, you really got to be careful. So I would expect to see some short-term selling opportunities here on the Russell, and then most likely, guys, long-term buying opportunities from there. Get us off those range highs, deal with that overshoot, right? The overshoot has to work itself out. You know, think about the psychology behind an overshoot. Everyone's taking profit, and sellers are coming in to get a good bargain of a price to sell at. So an overshoot has correction written all over it, okay, for many, many reasons. So expect to see a correction here, okay, before trying to retest the highs around 1208, right? I got 1207.4, but close enough. Okay, so there's my Russell for tomorrow. And then last but not least, here is another really, really interesting chart. Boy, we get a lot of really great stuff here on tonight's newsletter. You know, oftentimes these charts all look the same. These all look different, right? They all look pretty much, they all have their own unique kind of assets to them here. Now, couple things on this chart, all right? Let's go over them. First of all, spike and channel. Very obvious spike and then channel. Now, what do we know about a channel? What do we know about a spike and channel? First of all, we know to buy the low of the spike and channel, right? Like any other bullish channel, you buy the low of the bull channel. If it was a spike and channel down, it would be the exact opposite, sell the highs. So we know to buy the lows of a spike and channel. Look where we are right now. Okay, so I would expect, if these buyers have any gas left in the tank, I would expect them to run this sucker up to that buyer target and measured move high. Okay, that's where I would expect them to run it up to, right around that 1212 area. Okay, so 1212 will be an easy target. Again, I don't think this is going to happen, but the volume confirmed the buyers in control. We're right at the highs of that range on the 64 and the 32. So it makes all the sense in the world for these buyers to try and really struggle to push higher. Now, we know how to buy the low of a spike in channel, right? There's my channel, buy the low, and we have a target waiting for us overhead. But what happens if these buyers fail? See, this is how professionals love to trade spike and channels. When the spike and channel fails, basically, when the channel fails, it returns back to where the spike occurred. Now, I want you to think about how this applies to what else we've said. Remember, on the last chart, remember this? We had an overshoot. I want you to think about this, because this overshoot causes me to see most likely a bigger correction. Possibly down to 94.1. Okay, so the 16 tells us to expect a bigger correction. The spike in channel. If the spike in channel fails, whoops-a-daisy, we go all the way back to the beginning of the spike. A little bit further than that 94, there's that 94 area, right? That's where we think it'll go. So what we're looking at here is just like I said right out the gate today. Look for the buyers to try and fail. That's going to be the easiest way to sell off these highs. You're going to have an overshoot to work with, a spike in channel to work with. And I honestly wouldn't be surprised if by the time we come in tomorrow morning, we're already pushing to that high and then collapsing. Difficult to tell. Now, there's one more important clue on this, and that is the trading range. Now, there is a very, very easily defined trading range. Copy and paste, range expansion, and notice how it matches up with that measured move. This is extremely valuable information, guys, because if we do push higher, that's where you're going to get that resistance off that high. All right? Be prepared for tomorrow on this Russell. Okay, this isn't going to be the most affected market tomorrow. Gold and crude oil will be a little bit more whippy because of it. But now you have a plan. If we go higher, be careful buying at these highs. But if these buyers fail, you've got a great opportunity to take this sucker all the way back down to the downside. Now, let's wrap it up with crude oil futures. Now, I'm not much of a trading god type of guy, right? You know, we kind of joke around by saying we pray to the trading gods, right? Well, if there is a trading god up there right now, I am on my knees. I'm saying my Hail Marys. I am praying that this continues. Okay? If there's a trader's heaven up there, it's filled with megaphone patterns. Remember the megaphone pattern in the Russell we saw at the end of last year? Remember that megaphone we saw in the Russell? We made more money in the megaphone in the Russell in 2 weeks than we did the whole year. Okay, megaphones are very rare, but they are super powerful. Because the best part about a megaphone pattern is that you sell the highs and go all the way back to the lows. Buy the lows all the way to the highs, right? You get the point? Okay, this is why they call it a megaphone. You can also call this an inverted triangle, inverted wedge, whatever you want to call it. But that's a megaphone. So again, the heaven for day traders is filled with nothing but megaphone patterns, all right? So I'm praying to the trading guys this continues, because if this continues, we are going to have a first quarter that will probably be the biggest first quarter of my career. So very, very excited about the future here for crude. I mean, literally $7 up, $5 down. I'm sorry, it was a 20% move up, right? A 15% move back down and a 4% move back. I mean, what insanity right now. So right now, the most important thing, in my opinion, is just be ready for the volatility. I made some small adjustments this week to my trading strategy for crude oil, going to a little bit slower time frame with a wider stop and a little bit smaller position size, and really did very well with that. So I would recommend go with a little bit slower time frame right now, go with a little bit wider stop loss. Remember, a wider stop loss can be counter, right? You can kind of adapt for a wider stop loss by trading smaller positions. Okay, remember, I teach all of this to our students at School of Trade, so you don't need to think about doing this on your own. But right now we can see, though, that's a megaphone like no other on the crude. Beautiful, beautiful pattern. Now let's keep going here. On the crude 32. Yeah, as you can see, I forgot. My humor sometimes escapes me. So crude oil has been quite boring this week, right? Yeah, sure. Control has been back and forth. It was up, then it was down. We saw the overshoot yesterday, the big correction today. So, you know, I've been a bear on crude oil for the past 2 weeks straight, and I'm not convinced that we're bullish just yet, especially because tomorrow's NonFarm Payroll, right? So be open-minded for anything tomorrow. Like I said, we saw that big megaphone pattern, so it's no surprise this volatility is going to be pretty nasty. And nasty may not be the word. You have to be ready for the volatility by using, like I said, a larger stop loss, slower time frame, smaller position size. Okay, that's the best way to trade it right now. So be open-minded and be prepared for everything. The easiest money, at least as far as crude goes, is to sell the highs and buy the lows. The easy money right now, the easiest money, is going to be to stay patient, to wait for the extremes to be tested. So let's follow the bouncing ball here. We have this long-term bull channel. We break that channel, which means we are gunning right now. These buyers are gunning for that $55 a barrel. Okay, be aware. So if we run up tomorrow, you know where we're going. We're going to 55. Okay, that's pretty much a guarantee. So if we run this thing up tomorrow after non-farm payrolls, 55 is your target. Easy as pie. And it's also a measured move target. Okay, all I'm doing is saying we had that big channel. The channel was broken. And so you know those buyers are going to try it one more time, right? The market's always tried twice before giving up. So they're going to try one more time. They're going to try to run this sucker up there. But then you see here, now see, this is where it gets a little bit tough here because you get a lot. Again, I'm really giving you both sides of this. You've got the measured move now, AB, CD, and that's 54.88. I'm going to say 55. If we get that close to 55, we're going to go to 55. No question about it. Okay? So 55 is definitely where we're headed if we go higher here tomorrow. Then I will, of course, look to sell those highs because that's what you do at the highs. Okay? So be aware of that. Now, what if we don't go higher tomorrow? And again, I don't want it to sound like I don't know what I'm talking about right now, but there's no way for me to predict. There's no way for me to anticipate. So that's why I've got all the directions planned. Because tomorrow, after 8:30, I'm going to look at this chart again and see, all right, which way are we going? And then I'm going to adjust and trade this chart. Look at the next measured move. AB down to CD. Okay, so if we go lower, $45 a barrel to the downside. Maybe we get down to that 43.63. Tough to say. But right now, it's pretty obvious that if we go lower tomorrow, we're going to 45. And the best part about this is that a year ago, 1 year ago, we were seeing between $1 and $1.50 range, right? Right now, this week alone, we've had a $7 range, a $4 range, a $5 range. So historically, I wouldn't say we're going from 50 to 45, right? You'd be thinking I'm cuckoo. Well, I'm a little bit cuckoo, but a good cuckoo, right? A friendly cuckoo. You know what I'm talking about. Not the talking to your, well, you get the point. Anyways, back on track. But it definitely looks like I'm having fun with you guys here. I got to try to have some fun with you every day. It looks like, though, 55 to the upside and 45 to the downside. Okay? That's what it looks like right now. I've got all my levels waiting for me right now. Now all we need is that non-farm payroll report tomorrow. That's all we're waiting on. Okay? There's your 32. Now, let's crank it up one more notch here. You ready to really get the hands dirty? Okay, here's my 16. Crude oil looks mighty confused here. Now, I also included a larger scale of this chart. You can kind of see where I get that trend line. This chart, the zoomed out chart, is available for download right below the video. Okay, so don't forget about that. I'm going to zoom back in here, though. And what I want you to pay attention to here is just how all over the place this thing is, right? So anything can happen right now. We know we've got this bull channel up, and they're going to try to retest that high. So the buyers are going to try to run it up to that 52, 52 half, 52.77 area. Okay? Then, of course, I'll look to sell it back down. But the reality is right now, you know those buyers are trying to run it up to this sell zone overhead. On the flip side, though, we see that we have this new short-term bear channel. And again, if we didn't know tomorrow was non-farm payroll Friday, I would say, what the heck is going on with this thing? But this is just what you see ahead of this biggest news event we get as day traders. So we know that bear channel has us going lower, and we're probably going to make our way down to this 48, right? These are the extremes. When I say buy the lows or buy the extreme lows, sell the extreme highs, these are the extremes of the range. Right? You get the real extremes down at 47.36 and all the way up here at 54.21. Okay, so right now, the best way to make sense of this is to stay focused on selling that high, buying that low, and staying the heck away from that middle, right? The middle of this range is going to be really sloppy. And oh, baby, you couldn't script it any better. $50 a barrel, and that's the middle of the range? Are you kidding me right now? Obvious, right? I mean, obvious. If I was to ask you, what would the two biggest round numbers be? It'd be $50 a barrel and $100 a barrel. Here we are at $50 a barrel. So treat 50 just like 100. That's why I think the best option for us crude traders tomorrow is to let those buyers run it up and then sell it right back to 50. Let those sellers run it down and then buy it back up to 50. That's the easiest money you're going to make tomorrow, in my humble opinion. Now, you want a really good roadmap for tomorrow? This is the chart. This is probably the most important chart that I see. Okay, follow the bouncing ball, and we're finally wrapped up for this newsletter here to finish up the week ahead of tomorrow's non-farm payrolls. I appreciate you sticking around me tonight because I know this was a long video. So crude oil price action has a lot to tell us. It's screaming at us right now. Now follow the bouncing ball. Okay, there's 3 channels on this chart. All 3 of them are very, very important. First, we have our long-term bearish channel. We break that bearish channel, and you know those sellers are going to try to run it all the way back down. So my target for sellers is at 47.50. You want to see panic? You want to see panic tomorrow? Get us below 47.50. We go below 47.50 and we stay below it, I think $40 a barrel is almost a guarantee sometime next week. Okay? Now, I'm not saying to sell short below 47.50, but I'm saying you can expect panic to settle in for the buyer side if we go below 47.50. Because then what we're going to do is we're going to use this as one big measured move, right? If we go lower here all the way down, it'll correct off that low, and then we'll make a huge second leg down come next week. So the first big clue that I see here is this bear channel. So you know the sellers are going to try to run this down to retest that low where they left off. 47.50 is an easy target for the sellers. But wait just a second. Yeah, wait just a second. And there's more, and there's more. We have a bullish channel. I know. Like a broken record right now. Up, right, down, up, back down. Try to go back up today. So here we have, again, a bullish channel, broken, and these buyers are going to try to retest that high. That's why I say if we go above 51.91 before we go lower, it's almost a guaranteed bullish move up to that 54.20. Okay? So if we get above 51.91, it's almost a guarantee we go up to that high. Okay? Now, third channel. I know. I need a glass of water right now, right? Maybe a spritzer. Getting a little bit exhausted here. I know. I'm sorry, but I told you I'm going to have to cover everything here for you guys. I want you to be prepared. Better be prepared than not be prepared. So here we are now in a bearish channel. What do you see here? A break of that bear channel. What's going to happen now? They're going to try to retest that low. This is what my gut tells me this is what we get. My gut tells me we retest that 50.26 and we collapse back down, possibly before we even get news tomorrow. So right now, I think this, like I said, I think this is kind of your roadmap for tomorrow. If we go below 50.26, it's almost a guarantee. Remember, that non-farm payrolls is going to be the big variable. Almost a guarantee we go down to 47.50. We go above the 51.91. I don't like to say the word guarantee, but almost a guarantee we go all the way up there to $54 a barrel. Okay? Remember, tomorrow morning, be careful. Be careful out there. And you're not alone out there. We have a great community of traders here at School of Trade. We would love to help you guys kickstart your career safely. All right? Now, wrapping things up here, don't forget, grab your free pass, register for the newsletter list, download the charts for tomorrow, and if you happen to stumble over here to SchoolOfTrade.com, don't forget, we have one of the best free trials on the planet, if not the best. I would love to know if you found a better free trial. I'll put my money where my mouth is, and I'll prove it to you that we know what we're doing here. As if my newsletter hasn't proven that enough. But I'm going to show you more about how we trade inside that free trial. We have 3 levels of membership. Make it easy for anyone to get started. And we always have someone standing by 24/7, 365 to give you guys some help. Right? All right. My name is Joseph. Thank you so much for sticking around with me today. We don't do the newsletter on Friday afternoons. But I think I gave you enough information tonight to be good for Monday, because remember, the Monday after non-farm payrolls, we call it Reaction Monday. It's one of the best Mondays of the month. Alrighty, so be careful tomorrow. Be well. Have a great weekend. If I don't see you guys tomorrow in the trade room, make sure you stay on the right side of that market. And again, come out and see us in the trade room, and we'll walk you right through everything in real time. Thank you so much for being great people. Thanks for watching. Make sure you share this information with a friend, and have a great weekend. We'll see you tomorrow morning, 8 a.m. Eastern Time. All right? Monday is our next newsletter. We'll see you then. Adios, amigos. Bye-bye for now.